Good afternoon, everyone, and welcome to the Mastering Your Farm Budget webinar. My name is Lane Stockberger, and I am thrilled to be your host today. It's exciting to be in this virtual room with literally hundreds of so many amazing folks directly engaged in all aspects of the business of agriculture. I am blessed to have spent a lifetime in this incredible industry. Among my 30 years of farming, my experiences as a prairie boy have taken me to the east coast of Canada to experience a nor'easter firsthand, up close and personal. I've seen Canadian durum being unloaded from a vessel in Algeria, chased down Canadian marketing opportunities by bullet training on Italy, and I've seen firsthand the Mexican marketing adding value to our Canadian products. And I have used AgExpert software for over 20 years and continue to use it today and on my own business. Well, today's session is being delivered virtually. Wherever we find ourselves in Canada, we're on the traditional Indigenous territories with rich traditions, stories, and histories that we all have an opportunity to be curious about and honor. I am joining from Regina, Saskatchewan, which is located on Treaty 4 territory, the traditional land of the Cree, the Saulteaux, Dakota, Nakota, Lakota, and on the homeland of the Métis Nation. We honor and respect the presence and deep traditional knowledge, laws, and philosophies of the Indigenous peoples with whom we share this land today. Before we get into things, just a little bit of housekeeping. We've got a chat window on the right side of your screen. I invite you to pop in there, let us know where you're joining from today, and of course, I want to hear what the weather's like where you are. If you have any technical questions about the virtual platform that we're using, you'll see the blue support button down on the bottom of the screen. We've got an AV team ready to help you with any questions. Don't worry, this session is being recorded, and everyone who has registered for this will have a chance to receive it. We'll email it out to you in the next few days. It gives you a chance to rewatch this session, share it with those who never got a chance to be with us today. We'll also give you links to any of the resources that our experts mention in their session, as well as their contact information. Time permitting, we're going to try to answer a few of your questions at the end of our formal presentation. So if you have a question, please put it in the chat box. And again, we'll get you their contact information if you want to have any further dialogue with them. Lastly, before we dive in, FCC puts on several free virtual events just like this one. We have a very popular series that is going to have its second last episode, which is called Connecting Women in Ag. That's going to be happening next Thursday, February the 5th. It features a great lineup of women who will share their experiences with farm finances. You can sign up on the FCC website page. And with that, let's get right into it. So I want to thank our two presenting partners, FCC and BDO. It's their expertise that we're so excited to bring forward to you, our audience. Now, AgExpert is FCC's digital farm management platform designed to help Canadian producers make smarter, more confident decisions through its two core products, AgExpert Accounting and AgExpert Field. A farm-first program trusted for literally decades, AgExpert Accounting offers an intuitive system designed for bookkeepers of all levels. And AgExpert Field helps you get the most out of every acre through field performance tracking for data-informed decisions on your farm throughout the growing season and the entire year. And a big thank you to BDO. BDO provides table-to-farm solutions for your agribusiness. Their vision is simple and focused: to provide their clients with valuable, trusted information for their continual improvement. They go beyond completing year-end statements and complex tax returns to help family farms respond to changes and opportunities from technology solutions, farm transition planning, benchmarking analysis, and ag insights. Last year, FCC and BDO launched a program called Manage Your Farm Finances. It's a free online course series. It gives you a thumbs up, and let's give you a thumbs up if you have already used the Manage Your Farm Finance program and you're in it and completing. I'd love to see how many people have started to use it. It really is a great program that provides practical, hands-on learning about the finance side of your business. And today we're going to dive into one of those units from the program. And it's actually one of, I'm sure, all of our favorite management topics, budgets. So according to FCC's CEO checklist, which outlines key tasks of successful farming, A regularly reviewed budget empowers you to track your spending, adapt to financial changes, and make decisions that keep your business financially resilient. But less than 60% of farms in Canada produce budgets or track their profit. Herein lies the opportunity and why so many of you are with us today. Because budgets can help predict income and expenses, help to optimize resources on the farm, manage cash flow, identify potential problems before they arise, and give us a total financial picture of the farm business. Everything that's crucial as we run our very complex businesses. Now, before I hand it off to the real experts, we're going to throw a poll up to get a sense of where everyone is at in their budgeting journey. So, question on the screen, what is your biggest challenge when it comes to budgeting on your farm? Answers include, I don't budget yet, predicting and tracking expenses, estimating income, planning for the unexpected, sticking to my budget, what challenges? I'm a budgeting superstar, or I would rather be rolling up rusty barbed wire than budget. Okay, I maybe added that last one. It's not on your list, but it gives you a sense. Let us know where you're at. As we move forward with our farm budgeting, whether you're starting out or you're well on your way, we're going to share some of the foundational concepts around cash flow management and show you how to use AgExpert accounting software to do the heavy lifting for you and set yourself up for success when it comes to your budgeting. There's going to be a little bit of back and forth with this presentation, so I'm going to introduce both of our presenters right now. Joel Swedlow is a senior accountant at BDO in the assurance and accounting practice. Joel works closely with producers through BDO's agriculture industry group, helping them use their financial results to make confident, informed decisions about the future of their operations. Thanks for being here, Joel. And co-presenting with Joel today is Thomas Chevalier. Thomas is a product support and training analyst on the AgExpert customer care team. If you've ever called in, there's a good chance you've spoken with Thomas at some point. He's been with FCC on the AgExpert team for over 16 years and is passionate about getting it right and setting customers up for success. Great to have you here, Thomas. So let's look at those responses. As we suspected, it's kind of a mixed bag of answers from everyone, which is really what makes it interesting for Joel and Thomas, because they're going to have to capture it from those who do no budgeting to those that are quite advanced in their budgeting across the farm. So I'm going to hand it over to Joel to kick things off with an introduction of the concepts and principles that we'll be discussing today. Okay, Joel, over to you.
Thank you, Lane, and thank you to everyone who has joined us today. I'm joining from Portage, Manitoba, where it is a bombing -25, up to compared from a -45 on the weekend. I'm excited to be here and talk to you about effective cash flow management and how items discussed today can help you in your farming operations, especially during the current economic uncertainty in the world. We're going to cover 3 different topics throughout today's presentation. We're going to discuss the foundational principles of effective cash flow management and 2 types of budgets that go hand in hand to achieve optimal cash flow management. This event is to help give you the tools needed and knowledge to navigate challenges and seize opportunities that come with optimal cash flow management. By the end of today's event, the goal is for you to be able to distinguish between the 2 types of budgets, plan for surprises, whether it be unexpected expenses or additional surpluses of cash flow, account for seasonality throughout the cyclical nature of farming, and project and estimate cash needs before running out of cash. So what is cash flow management? First off, I would like to provide a couple of examples of cash flow fluctuations within farming operations, and I want to think of how it may apply to your farming operations. And if none of them do, think about when you're most cash inflow heavy and cash outflow heavy. Different farms face different challenges, which will obviously vary by region and sector. For instance, on dairy and poultry operations, cash flow is typically regular and predictable. For pork producers, sale volumes may be consistent, but prices could fluctuate dramatically. If you're establishing a vineyard or an orchard, it may be several years before you have any income, and yet you'll incur high costs in the meantime. Another example here that I see very often is a grain operation, where cash inflows may be higher in the fall time when cash is sold off the field or when you're cashing in contracts, and maybe a cash outflow higher during the springtime, during planting season with crop inputs. So how do you manage the unpredictable aspects of cash flow management? There are three key pillars that work together in creating that optimal cash flow management. The first one is planning, which is creating budgets based on expected timing of when we expect major cash inflows from sales and major cash flows from expenses. The second one is monitoring. Monitoring is one thing to create a plan. It is another to follow. By monthly or quarterly reviewing actual results to forecasted, it gives you a better opportunity to understand your current cash flow needs, what has changed from your plan, and allowing you to quickly analyze what deviate from your plan. Finally, the third one is acting. Acting is one thing to create the plan and monitor, but using the information to help make decisions is the end goal. By using the first two pillars will help you have the ability to make decisions, which can be to understand if you need additional financing to help cover shortfalls, or if you have excess income that you can look at diversifying your portfolio. There are two main focuses when it comes to cash flow management, a short-term focus and a long-term focus. The key to each one is understanding liquidity. Liquidity is how quickly assets can be turned into cash. Generally, a higher liquidity means more room to maneuver in the economy and have the ability to adapt. Some examples of higher liquidity are cash, high interest savings account, and your AgExpert account. Examples of lower liquidity items would be your capital assets such as tractors, combines, or long-term investments such as 12 to 36 months GICs. During the short term, it is best to understand that you have cash when you need it throughout the operating cycle. This is to help cover off expenses, meet obligations such as debt payments, and being able to cover any unexpected costs or emergencies. During the long term, it is best to manage liquidity. The more liquidity you have in your operation, the more flexibility you have, as it allows you to both seize opportunities, navigate through tough times. By actively managing your cash flow and maintaining a healthy level of liquidity, you're setting yourself up for greater stability and adaptability, which are essential for running a successful and sustainable farm operation. The key takeaway here is understanding what is a strong liquidity, as it helps you adapt and seize opportunities and provides flexibility in times of need, such as a large repair, purchasing a piece of land or equipment. If it takes a while to turn assets liquid, that opportunity may be lost, leading to missed out on that certain piece of equipment at a certain interest rate. As I mentioned, the two budgets that work hand in hand to provide optimal cash flow management are operating cash flow budgets. The operating budget is understanding the profitability of your operation through a certain time period, which is usually an annual time frame. It lets you set financial goals for the year, allocate resources, and help you make targets in the year. It focuses mainly on revenue and expenses over that time period, and it'll help you guide you through financial decisions like understanding what targets you may need to hit, or production or target pricing. As we move on to the cash flow budget, it's going to be understanding if you'll have enough cash when you need it for paying expenses or meeting debt obligations. It will allow you to have a detailed forecast of revenues and expenses, which is similar to the operating budget, but this one also ties in with the timing of when you physically receive that cash flow or outflow. The cash flow budget is typically prepared monthly or quarterly, which helps you anticipate potential cash shortages or surpluses before they come up. Again, the key overall difference between the two is one is based on cash flows, cash inflows versus outflows, versus projected revenues and expenses, which is on the accrual method, which is recording revenue or expenses when they are earned or incurred. Effective cash flow management can reduce overall interest costs and allow your operation to capitalize on opportunities. Both budgets are essential to cash flow management. They provide a comprehensive view of your financial situation, allowing you to monitor your cash flow, identify potential issues, and take proactive measures to ensure you have sufficient cash on hand to meet your obligations and pursue growth opportunities. I'll now get into the operating budget. So why do we use operating budgets? They act as your farm's detailed roadmap or strategic plan for the upcoming year. It outlines your financial goals, anticipates income, and projected expenses. Just like a roadmap helps you chart the best route to your destination, an operating budget guides you in making informed decisions, setting priorities, and allocating resources effectively. It provides a clear direction for your farm's financial activities. So you might be asking yourself, what is the difference between an operating budget and income statement? First, the operating budget is a forward-looking projection of your revenue and expenses during a specific period. It helps you plan and set financial targets, such as what your production goal may be or where you need the market to be at to sell your inventory. Now, on the other hand, the income statement is a historical record of the actual revenue and expenses that you incurred during a specific period. It's going to provide a valuable benchmark to compare actual results against your budgeted projections. So to think of it like this, the operating budget is very forward thinking, what I want to happen or plan to happen. And an income statement is looking in the past, a historical picture of what has happened. These two work hand in hand as it allows you to understand what happened that created the differences in the past and help you realistically predict the future. We'll move on to the steps to completing an operating budget, providing a practical process. There's going to be 6 steps that come throughout this process. So in completing an operating budget, it'll provide a great outline and provide practical steps to help your operations start building an operating budget. Step 1 is just collecting and analyzing financial info. Again, this may seem tedious or time consuming. It's going to allow you to really understand your financial position and help project future outcomes by understanding trends within your historical figures. It can identify cyclical trends such as when you are most cash inflow heavy versus when cash may drain on your cash account. Step 2 is identifying and list projected income sources. This list will include all income sources, whether it be from crop sales, cattle sales, lease or rental agreements. Understanding all of the cash inflows will help you project a more accurate budget. Step 3 is identifying and listing cash and non-cash expenses. This will include all your inputs from production, fertilizer, chemical, seed, crop and livestock insurance, payroll expenses, depreciation of capital assets, costs for professional fees such as accounting and legal fees. Again, a quick tip here is using your financial statements can help identify your cash and non-cash expenses to ensure you're not missing anything that's major. Step 4 is, again, categorizing your expenses. So another good rule of thumb here is to review your financial statements from your accountant to help categorize your expenses into appropriate categories. We at BDO separate this on our farm financials to really help provide a starting point, and it's easier to identify what may have changed from year to year. Step 5 is really the most difficult as it's very hard to predict future outcomes. This is where being realistic allows for a true picture at the end. A common issue we see is undervaluing your expenses, thinking you may not spend that much. That is where it is great to have your past financial statements to get a more accurate picture of certain trends that are occurring, such as historical high chemical costs due to unknown pest issues, or an understanding that your steel, such as tractors, combines, etc., are older and require more maintenance than newer equipment. Another option is to consult with suppliers, advisors, and fellow farmers to understand what the cost of potential items are going to be. On the flip side, now you're going to estimate your expected income. You're going to want to take, again, a look at your past financials to grab a good grasp of the revenue trends to help with projections. You also need to analyze your current production decisions. This would be, what are you planning on growing and how many acres? You really need to understand what your potential capacity is to sell certain crops in the future to really predict and have the most accurate income projection. You're going to want to analyze current market conditions to understand the current supply and demand, to understand those projected market prices. Finally, you'll need to understand your potential risks and uncertainties that could impact your revenue. Factors would be weather conditions, pests or disease, trade regulations. Assessing and addressing these risks in your budget help anticipate and prepare for any negative impacts on your income. If you forget to address these risks, it creates a plan to fail, especially in farming due to the extremes from one side to the other. Finally, step 6 is calculating projected revenue. This is calculated from taking your projected income less your projected expenses. That equals your total profit. Your profit should be sufficient to cover your overall operational costs of running your farm and meeting your debt obligations. There should also be enough to replenish contingency funds, allocate to savings, and reinvest in growth. So what are some next steps after you prepare this operating budget? If your budget is showing a loss or no profit at all, don't feel panicked or discouraged. it is necessary to understand the reasons behind the projection. Go back to your budget and identify areas that be contributing to the shortfall. Review expense categories, analyze pricing and marketing conditions. Does this trigger a question of going to negotiate better pricing with suppliers or maybe implement some cost-saving measures? Do you need to go to review new markets to sell your crop or livestock? Increase your product diversification. Finally, reach out to your financial advisor for aligning your financial goals with your actual performance. So just to wrap up the operating budget here, a well-crafted operating budget is like having a plan for how you want your year to go, with the added bonus of also being able to react to unexpected events or opportunities. As a producer, it's understandable that bookwork often takes a backseat during busy season. However, regularly reviewing your actual financial performance against your operating budget, using your detailed financial statements, is key to staying on track. Your budget is not a static document, but rather a dynamic tool. Budget reviews and financial analysis allow you to identify areas for improvement, make necessary adjustments, and ensure that your farm's financial goals align with your actual performance. I will now pass it off to Thomas to show you a demonstration on how to use AgExpert.
Thank you very much there, Joel. All righty here. So we're going to talk about AgExpert accounting today. It's an extremely easy bookkeeping platform meant for Canadian agriculture. When someone starts out with this, they create a file or an account, and from there, we can create a chart of accounts automatically to populate all the accounts they need to get going right away with their bookkeeping. As the user enters transactions, sales, and purchases, the data gets filled into the tables, and from here we can generate a ton of different reports to meet any financial obligation. Today I'm going to show you that budget tool that we spoke about. And so on the left, we're going to click Planning, and then Budget. Now in this set of books, I have some information already entered, but I'm going to show you just how easy it is to use this tool. So on the left, we have a column, Income, and we have another here called Expenses. Here we can see our account name, the type, our budget value, and then the actual value. We can click on either Set under the Budget column or on a number we've already set to simply open up a monthly budget tool where we can fill in a value we need. So for example, I can type in this number, and this is again according to what we anticipate receiving in the context of some hard red spring sales, for example. Now, as we enter information, it fills in to the right. So we can see here that although we budgeted for a $30,000 sale, we actually only sold 20, and we can see a difference. And so this can get factored into the contingency plan that Joel spoke about. I'm going to show you an example of how easy it is to enter a transaction and how it instantly updates this budget tool. So I'm going to click the orange action button above, and then I'm going to click Deposit on the left amongst the different types of entries our system does. From here, our transaction screen opens up. I'll simply pick the customer who I sold this to. We're just going to pick this, for example. We pick the bank account the money went into. Under total, we can enter the total amount sold. On the right, we'll pick the date. Pick today's date. Next, we can pick multiple types of income streams or accounts to represent this sale. In this context, let's pick the Amber Durham. You can have multiple rows here for expenses such as freight deductions or dockage. But today we're just going to focus on the income line. We're going to make sure it says the same amount that went into the bank. Our entry's balanced, and we can quickly hit Save and Close. See how this affects our transaction and budget screen. And so coming back to the budget screen here, give it a moment. Hit back here. All right. My internet's a little bit spotty for some reason. But as we enter information, it automatically populates in this table. Here we can see the 15,000 that I deposited right there. Now, because I haven't set a budget, we see the same difference. So let's say, for example, that I anticipated having only a $13,000 sale. And again, you can break this out per month or however you please. And as I update the value, we instantly see it updated on the right. Now, with this information, we can print it or we can share it with our accountant or our business partners to help us, again, make more informed decisions moving forward. And the same applies for the expenses column. You can come here, and so years that you anticipate having more or less expenses, you can really fine tune these numbers in. And the more that you put in, the more you get out. And year, after using this product, these values will get more and more realistic, and you should find that your difference gets smaller and smaller as you make more informed decisions. Thanks for listening. With that said, I'm going to pass it back to Joel here.
Thank you, Thomas. That's a great tool to use for your operating budget. I know we have a few clients within our office that use that tool. It's very unique and easy to use. It's better than a pen and paper that you don't have to go update all the time with your current income and expenses. It's a really great tool. And if you have AgExpert, I would start implementing that tool in your day-to-day operations to implement your operating and your cash flow budgets. But again, thank you, Thomas, for that demonstration on using AgExpert for operating budgets. And now we're going to turn our attention to cash flow budgets. So operating budgets do not provide a complete picture of a farm's cash position. This is where the cash flow budget comes in and how the two are required for optimal cash flow management. A cash flow budget dives into the nitty-gritty of cash flow by considering the specific timing of cash that's coming in and cash that's going out. You can think of a cash flow budget like your financial safety net. By closely monitoring the timing of inflows and outflows of cash, cash flow budgets help you anticipate and manage any shortfalls or surpluses, enabling you to take proactive steps to maintain a stable financial position. So what is the difference between a cash flow budget and a cash flow statement? It's very similar to the operating budget and the income statement. While both a cash flow statement and a cash flow budget track cash inflows and outflows, they serve different purposes and have different characteristics. If you recall, a cash flow statement is a historical record of a farm's actual cash transactions over a specific period, typically monthly, quarterly, or can be annually. That helps you understand if your cash position is strong, meaning whether you have enough cash on hand to meet your short-term and financial obligations. A cash flow budget, on the other hand, is a forward-looking projection and estimate of future cash transactions over a set period. It's used to plan and manage the farm's cash effectively to ensure that you avoid cash shortages and meet your financial obligations. A cash flow budget helps plan for investments, expansions, diversification, and help manage potential risks or financial challenges. For example, let's say you've rented additional cropland for your new growing season. You know your cost of production, and you're confident the additional acres will enhance your profitability and move your farm ahead financially. There's going to be a few questions that you need to ask yourself related to this additional cropland and implementing this into your cash flow budget. You're going to need to understand, will you have enough cash available when rental payments are due? What about other farm input expenses that need to be paid before any crop is harvested? Will I have enough cash on hand? Is your operating loan adequate to cover your expenses? This is where a cash flow budget will help answer all these questions when you're looking at implementing something new into your crop plan. So we're going to move into building on from your operating budget and how it interacts with the cash flow budget. Again, both of these are very optimal and effective cash flow management. So to create a cash flow budget, you can use your operating budget as that baseline. Your operating budget tells you how much money you'll make and spend overall, but it doesn't tell you when that money will be coming in or going out. So that's what you need to determine with the cash flow budget. So you're going to start by looking at your revenue projections and identifying the timing of your expected income. For example, let's say you expect to receive payments for crops in 3 installments, $30,000 in May, $40,000 in August, and $30,000 in October. Next, you're going to review the expense categories in your operating budget. You're going to identify the timing and amount of each expense. Because the ag industry is unique and cyclical, expenses don't happen at even intervals throughout the year. To transition from an operating budget to a cash flow budget, you'll need to consider your debt obligations, both the timing and the amount of your debt payments, as well as outright capital purchases, as these are actual cash transactions. Next, you're going to create a timeline that shows the expected cash balance at the beginning and end of each month, quarter, or your predetermined period of time that you're doing your cash flow budget on. Your cash flow budget shows that you have a positive cash flow in May, August, and October, and a negative cash flow in June, July, and September. While deficits in farming should be managed and minimized where possible, they're often a part of the normal operating cycle. It's important to have a holistic view of your farm's financials and understand that deficits during certain periods can be offset by surpluses in other months or quarters. Cash flow is not a measure of profitability. A business can have significant cash flow shortfalls throughout the year and still be profitable. Cash flows look only at money movement, not at net income or profitability. But a healthy cash flow is a good sign that you are profitable. So once you have your cash flow budget, an essential component of cash flow management is analyzing it, right? We're going back to that third pillar I discussed earlier. By analyzing your cash flow budget, you can gain insights into your cash flow patterns, identify potential shortfalls and surpluses, and then you can finally make informed decisions on how to manage them. If we go back to our timeline example, where we were earning income over 3 separate months, you can see that you'll need to find ways to manage your cash flow during June, July, and September. You might consider delaying certain expenses until you receive your August crop payment. You could set aside funds, or you could arrange for alternative sources of financing to cover those gaps. You might even need to consider finding ways to generate additional income during the lean months. Knowing when you have cash coming in and cash going out lets you work towards scheduling payments around the flow, which may involve negotiating payment terms and managing your inventory appropriately. Cash flow analysis also enables you to determine the most suitable loan term and repayment schedule for your farm. For instance, you can align your loan payments with your expected cash inflows. This will allow you to have sufficient funds to cover both your operating expenses and loan obligations at cash inflow heavy times. Knowing when cash is flowing and when it isn't is also key to being able to implement appropriate risk mitigation measures to safeguard your financial stability. For example, let's say you've grown corn and soybeans. You know that historically prices drop during harvest and that your projected cash flow is low at that time. With this knowledge, you can implement appropriate risk mitigation measures to safeguard your financial stability, such as having cash reserves on hand or locking in a price by engaging in forward contracting. Now I'm going to jump into a couple positive versus negative cash flow strategies when you have that additional cash on hand, or when you may be in a deficit and you need to make up cash to make your debt obligation payments or coming expenses due. First off, I'll start with the positive cash flow. And the first one is going to be hold on to cash for operational expenses in upcoming months. Understanding that having additional cash on hand does not always indicate profit, as it's always possible to have cash coming in from different sources such as sales or loans, right? That's not your profitability, as loans are cash inflow and not actually an income item. The second option is leverage your cash position to reduce risks. A couple of ways to do this is look at buying inputs in advance with the additional cash to potentially take advantage of discounts. You may be able to negotiate some better pricing or secure necessary supplies for upcoming production cycles. The second one is look into forward contracting, maybe securing a stable revenue stream and manage that uncertainty of the volatile market conditions. And finally, the third one for positive cash flow is embark on value-added opportunities. Maybe look at investing into equipment or infrastructure, such as producing and selling specialty food products. Make additional payments toward your loans to reduce debt and overall interest payments. Now we flip over the negative cash flows, and I'll discuss another three examples here. One is reduce costs or look for efficiencies. Take a look at your fixed or variable costs and determine if there's an opportunity to reduce that cash flow, such as reducing labor during downtime. The second option would be explore other opportunities. Is there other markets that I can sell my grain or livestock to? Is there a piece of equipment that is not being used that could be sold for cash inflow to help cover expenses? Finally, do you have additional storage building that could be rented out, or that piece of equipment that is not being used, could it be rented out? Finally, the last one is diversify. If your primary income comes in the fall, consider incorporating something into your operation that produces income in the late spring. This diversification can help in mitigating the impact of seasonal fluctuations. Extending the terms of certain loans to reduce the annual financial obligation can be another possible solution. Finally, if your operation is vulnerable to an interest rate spike, it may be prudent to lock in your rates to protect yourself from potential increases in the future. I will now pass this over to Thomas to go over a cash flow budget demonstration in AgExpert.
Thank you very much. All right, flipping here to the AgExpert product. So, very well said there. The cash flow is when money comes in and how it moves out of the account, and ensuring that you know when that's happening so that you can make informed decisions to pay off your debts and keep that business operating. So with AgExpert Accounting, as you enter your purchases and your sales, and you ensure that your transaction dates are correct, the system will automatically capture all this information, and we can leverage it to build an excellent cash flow projection. On the left, I'm going to click Planning, and then I'm going to click Flat Cash Flow. So here is a really easy tool you can use. As we can see on the left, we have a cash in column. So this will show us all the money coming in to the account. So this could be income from sales, it could be income from insurance sources, this could be from investments, or even from bank accounts transferring to other bank accounts we have. As we enter deposits, on the far right, we'll see the actual column build up. Now, on the left here, we have a little projected column. So we could click Set, and we could say that at the beginning of the year, we're projecting to have a certain amount of money in the account. So let's just put a number here, for example, and hit Save. And as we can see, the projected amount, and then we have the actual. Now, as we get better with entering information in the system, you're going to start to see trends. And this will be, pretty typical in the industry, where at the beginning of the year, you may have a lot of expenses for things like grain seed, fertilizer, or maybe even prepay your seed in fall to get a better rate. And so we have this trend of getting the seed early and purchasing it through March and April. And then when it's time to seed, it's go time. And we start entering those operations as we fulfill them on the field. And then we have, of course, fertilizing, spraying, all through the general harvest cycle, if you will, of a typical grain farm, for example. And so with this example, we can follow the cash flow in a little bit of an easier way for today. So scrolling down, we have all of the income that we've projected, and then our actual income received. So the idea is that the user goes here and they fill in these projected values. And as they enter the information, we'll see it available on the right under actual. Scrolling up, the same is repeated for cash out. So this is where the money comes out of the account for all those expenses I mentioned. You can set projected values on a monthly basis. And from here, you'll see these values entered here in comparison to their actual figures. So it's important to enter your information in AgExpert or any bookkeeping platform accurately and respecting the dates. Because as you do this, same thing for inventory. When we get to our monthly cash flow tool, where we can see a nice chart of what's actually happening, we can have a really simplistic view of the trend of our business, where, hey, I have money coming in January and February, and then I got my grain seed and all those other things that I need to kickstart the new year. And then we have our expenses as they continue forward, and then perhaps some more grain sales near the end of the year. This information can be shared with your accountant, your agronomist, whoever else you need on your team, or your lender. And you can also print this here. And just, to wrap up this cash flow tool, again, the more you put in, the more you get out. You'll find that AgExpert is an easy tool. It's solid and it's built for Canadian agriculture. So if you have any questions on this, you can definitely give us a call and we'll help make sure that you get started on the right foot. With that said, thank you for listening. I'm going to pass it off back to Joel there.
Thank you for that demonstration, Thomas. The valuable tools within that AgExpert allow for a reduction in task and time of creating and monitoring both a cash flow and operating budget. Those tools are user-friendly and can be beneficial in managing and implementing effective cash flow management. The graphs have a really good visual of when you may need additional cash on hand. Like it's right in front of you. Very recommending to use those tools that are available to you to reduce overall input. And everyone wants to get back in the field and do the appropriate things. So these tools help you minimize the business side of things and get back to actually what you want to be doing and what's most important to you. So with the discussion of budget over with, I'm going to just provide some tips and tricks with regards to effective cash flow management. The first one here is just going to be create short-term and long-term cash flow plans. Make sure you focus this around liquidity to provide you with the strongest position possible to be able to be available when an opportunity strikes or maybe when an unexpected expenses arise. The second one here is monitor and update your budget regularly to identify opportunities and potential issues and adjust accordingly. This is what monitor and the decision pillar working together. Again, with so many uncertain times, to get the most out of your operating and cash flow budget is regularly updating and regularly looking at it to get the most out of it. Third thing here is remember the difference between operating and cash flow budgets. Operating budgets are geared toward profitability, and the cash flow budgets look after actual cash inflow and cash outflow. Finally, the fourth tip here is cash flow and operating budgets prepared are great tools to help drive business meetings, family check-ins, and succession discussions. Finally, I'm just going to wrap up with some key takeaways. I made light of it maybe earlier, but I know that many of you use still a back of the napkin calculation to communicate your cash flow projections to your farm partners, lenders, and financial advisors. But there are better, more accurate ways to do this, such as spreadsheets, farm management, and specialized accounting software, especially the AgExpert software that Thomas just showed. By embracing these tools for cash flow management, you can significantly elevate your ability to navigate and optimize your cash flow. I'd like to close this unit by reiterating the importance of cash flow management in running a successful farm operation. Cash flow management involves effectively monitoring, analyzing, and controlling the flow of cash in and out of your business. The primary goal of cash flow management is to ensure that you have cash on hand to meet your financial obligations and cover operational expenses. To manage cash flow effectively, you need to create a realistic budget, monitor cash inflows and outflows, optimize cash flow timing, and make informed financial decisions. Whether you're a seasoned producer or just starting out, the techniques and the best practices that I've outlined in this unit will go a long way in supporting the financial stability and growth of your farm business. I'll touch on some key takeaways from the event that can help your farming operations business have an effective cash management program. Put the knowledge learned today into practice. Remember the 3 pillars: plan, monitor, and act on budgets created and plan implemented. Operating budgets are profitability. Cash flow budgets plan liquidity and financing. Some additional discussion points to help with implementing the effective cash flow management are: where do some of my cash crunches occur during the operating cycle? Is it during harvest or planting? Each operation is unique. What decisions could improve timing of cash inflow and outflow? Have this discussion with your advisors if needed. Finally, what would change if the worst case scenario happened in the year? Think about it like that as during these uncertain economic times that the worst may be to come and that you need to be able to adapt, and budgeting goes a long way with that. So I want to thank everyone for attending today's event, listening to the topic on effective cash flow management. I would be happy to connect with anyone that is looking for additional support to implement effective cash flow strategies or anything else business related. I'm going to now pass this back over to Lane to close out the event.
Thank you very much, Joel. And you, Thomas. Appreciate your guys' insight, but I'm not letting you go quite yet. We have actually had some good dialogue and questions asked, so I'm just going to kind of take turns asking them, and if either of you wants to add an additional comment afterwards, by all means. So the first question to Joel would be, how do you manage to set budgets during a period of uncertainty? Grain prices are predictable, just like meat and livestock. And it's the same for inputs. With everything going on in the US, Russia, Ukraine, how do you manage to set budgets with so much uncertainty?
Yeah, that's a great question. I think managing the uncertainties by including some unpredictability in your projections, maybe it's including a couple percentage points or dollar values of what you may expect to earn or you might pay, it goes a long way in kind of eliminating that unpredictability that it's so current in the economic or in the world today. Again, I think this is also a great opportunity for you to have a conversation with your financial advisors, whether it be your accountants or your account managers, just to understand the insight and if there's any additional value that can be provided there. And then lastly, just it's very important that you should monitor your budget, which is what the second pillar was we discussed today, right? So if you're not, if you're planning it and you're not monitoring it and you're not acting on it, there's really no effective cash flow management there. You need to monitor your budget. You need to update for those uncertainties as they arise, as it provides effective cash flow management.
Thanks, Joel. Thomas, this one's for you, and this was from your first set of questions, or first set of demonstrations. In the budget transaction, are you entering actuals as they happen or projected?
I'll share my screen here. All right, let's get back to it. So in the budget tool, we can enter budget values as we project, and the actual columns are filled in automatically as you enter transactions. So for example, let's say I enter 2 deposits for the 16,000. That's why I'm seeing that number in this column. And then the budget is as you plan, if you will. I'm not sure if that answers the question or not.
No, I think it does. And we have a follow-up, a secondary one to this is there a way, and maybe this is an opportunity for the future if it isn't today, is there a way to have your budget for the upcoming year pre-populate based on the values from the previous crop year and then just edit them from there rather than having to go through each account?
Right now, we don't have that capacity. When you start a new budget tool, we have this blank slate, but that is on our ideas board to have for an upcoming release. And presently, our AgExpert field software has a crop planning tool, and it does do that. And so we definitely have the framework to add that functionality in the near future.
Perfect. Thomas, you mentioned the idea board. AgExpert has some great tools available to farmers, whether it be, I'm not sure how to use this in the software, or I have an idea, like you just said. There's great avenues, and we're going to put some links to that in the email that we send out after the webinar that just kind of directs people there.
Absolutely. And if ever you're unsure where to go, simply log into AgExpert and look for the little help button in the top right, and you'll find everything you need there.
Perfect. Thomas, coming right back to you. Does the expenses and incomes in the cash flow budget mirror the operating budget, or do they live completely separate from one another? And I think you kind of got to this, but can the budget values transfer to the cash flow tool?
Great question. They are independent from another.
Okay.
The actual numbers, which we enter as transactions, those will of course carry through either. But again, I like what Joel said earlier about the difference between the operating budget and the cash flow. Yes, we can definitely kind of use the same numbers as we go between the tools, but the budget tool is to help make sure that what we're going to sell our grain for is what, for example, we predicted. Whereas the cash flow is more of a when. Are we going to have that money in this account at that time? And so you can definitely leverage the same numbers either way, but I think it is important to remember the intention or the methodology behind the two tools are slightly different.
Thanks, Thomas. Joel, this one's for you. What are the biggest mistakes you see farms make when they start budgeting?
That's a great question. The biggest mistakes I think is just you're either underestimating your overall expenses or you're overestimating your expected income, right? Farming is so the variables change so quickly sometimes, so it's very hard to be realistic. But I don't think being unrealistic in your budget by assuming you might get $25 a bushel for canola and you're actually going to get 10 bushels per acre or per bushel for canola. I think that's the main thing, is just be realistic when you are preparing these budgets. I think too many times people just expect that they're not going to spend so much, or they're going to earn quite a bit more. So that's probably the main thing that we see.
Okay. So, I mean, AgExpert can be a great tool to help with that budgeting, and I think it maybe would help with this question. But is there a risk of overcomplicating a budget? Kind of that paralysis by analysis.
Yeah, there's a risk with if everything you do, right? So I think um, not. Sorry, I'm trying to think here on the top of my head. Yeah, I think there's risk involved with not managing your budget and overcomplicating it. When you put too many variables in, then you're going to really struggle with always updating that monthly or quarterly, because you're just going to feel overwhelmed. The more simple you keep it, the more realistic you keep it, the easier and the more likely you're going to go back and continue with that budget. Just like a personal budget, you can have the most complicated thing or complicated budget. I know for myself, like I'll create something and in a month later, I'm like, why did I do this? And I'll just simplify it. So that's the biggest thing.
And I guess the best step is to at least make a step towards it, right? I mean, if we go back to the poll, we had a number of people that said, I don't do any budgeting. And so step one would be at least making, maybe it's a very simple budget, but at least getting it down on paper and starting one.
Yeah, I think that's a great point. Like just estimate your income, estimate your known expenses, and just start from there. It's the very first step. Just start and see how you feel, and make it grow and make it more complicated as you need to, if that's what fits your operation.
Joel, BDO, Thomas, FCC, AgExpert, I thank you both so much for being with us today. We're going to include both of their contact information. So if you have additional questions or something that we touched on here that you want to explore further, you're going to have that ability in the upcoming days when we send out, number one, the link to this live cast. As well, we're going to send out a survey. Tell us what we did best. What could we improve upon? How could we make this a better fit for you for upcoming webinars? FCC hosts a lot of these over the course of the year, and you can sign up for any of those on the FCC website on the events page. Still a number of events that are going to happen between now and the end of winter. Obviously, we host a good chunk of those in that season, but we host them over the entire year. AgExpert, I mentioned some of the tools that they have. We'll send a link out to that as well. They also have a number of webinars, kind of regular webinars, to just give you tips and tools and ideas on using the software. I highly encourage you to check it out. It can just help with sometimes those little nuances that you're not sure where to go with. They can help. And a bonus to anyone who is joining us today, if you are either a new AgExpert customer or an existing one, and if you complete courses 2 or 3 of the Managing Your Farm Finance course that I mentioned, we'll make sure to include the link to that, you will receive a free 1-year subscription to the AgExpert Premium. So again, complete course 2 or 3 of the Manage Your Farm Finance course, and you'll get that 1 year, whether you're an existing customer or not. So watch for those emails. Thank you, Mayor, very much for taking an hour to spend with us on this very important topic. Joel, Thomas, thanks again, and I hope you enjoyed your time. We thank you very much. Take care.